Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the markets. Let's kick things off by having a look at today's economic calendar.
Today, we have a lot of exciting updates that could create fantastic trading opportunities in the market. First up, we have the PCE price index data, which is the Federal Reserve's preferred inflation gauge. Traders should keep a close eye on this, as it could create some great trading opportunities throughout the day. In addition, the Canadian GDP will also be released, which will create additional trading opportunities on all our Canadian currency pairs. But wait, there's more. To add to the excitement, we are giving away a limited edition branded mug to one lucky viewer. All you have to do is like this video and answer the question, what is the nickname of the US dollar-Russian ruble currency pair? In the comments section below. The options are A. Putin, B. Matryoshka, or C. Barney. Don't forget to subscribe to our channel to be eligible to win. The giveaway will take place once we reach 300 subscribers. Terms and conditions apply.
Let's move on by having a look at what's making headlines within the financial markets today.
Let's dive into the currency news. The dollar rose as weaker than expected U.S. economic growth in the first quarter is viewed as not likely to deter the Federal Reserve from raising interest rates next week. The economy grew at a 2.6% pace in the fourth quarter, but the advance estimate of first quarter GDP showed a 1.1% annualized rate during the period. Investors focused on the quarterly inflation number within the GDP report. Core personal consumption expenditure prices rose 4.9% in the first 3 months of the year, higher than the 4.7% consensus, and up from the fourth quarter figure. This weaker growth outlook suggests that the Fed will struggle to keep hiking interest rates without crushing the economy. Now let's move on to the analysis for today on the Euro-AUD. This currency pair is currently trading in a descending channel formation, but a break of the channel and a close above 1.667 could trigger a buy all the way up to the next primary resistance level. Shifting our focus to Wall Street, US stock futures posted significant gains during the regular session. The Dow Jones Industrial Average added 1.6%, the Nasdaq lifted 2.4%, and the S&P 500 gained 2%. In extended deals, Amazon fell 2.6%, reporting Q1 earnings per share of 31 cents versus 21 cents expected on revenues of $127.4 billion versus $124.55 billion expected. Next up, we have the Dow Jones Analysis. The US 30 broke through that resistance yesterday. If we can remain above the resistance and get a close around 33,850, we could see a rally all the way back up to that next resistance. However, if we break back below and close below 33,600, it could trigger a decline back down to that previous support. Moving on to commodities, crude prices rose for the first time in 3 sessions, as bulls sought to steer the oil trade away from global economic worries that pushed it toward a second straight week of losses. However, gains were limited as data showed US growth slowed more than expected in the first quarter, despite resilient labor conditions that suggested more rate hikes to tame inflation. WTI and Brent fell a cumulative 6% each over 2 previous sessions to head for a loss of about 4% this week, after last week's slide of more than 5%. The drop in crude prices came as global economic fears overwhelmed a burst of optimism created by a production maneuver announced by OPEC Plus earlier this month to rescue an oil market that hit 15-month lows in March. Now let's take a look at the analysis on crude oil for today. WTI is currently also trading in a channel formation. Should we get a close above 75.4, we could see a rally all the way back up to that next resistance. Should we, however, get it close below 74.5, we could see a decline all the way back down to that next support. Lastly, let's finish things off with gold. Gold prices fell, extending losses into a second straight session as stronger than expected US inflation and labor market data saw fears of more Federal Reserve rate hikes come back into focus. Initial jobless claims unexpectedly fell over the past week, separate data showed, indicating that the labor market was running strong despite the Fed's expectations for some cooling. The yellow metal is now set to end the week well below $2,000, after failing to retake the level in recent sessions. Looking at the analysis for gold today, The yellow metal is currently trading just below that resistance level should we get a close above the resistance. At 1992, we could experience a rally all the way back up to those in previous high points. Should be, however, close below 1981, we could experience a decline back down to that previous support.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the peace be with you. Cheers.